The day. But let's get on board for our guests for today, and we have Kunal Bothra as well as Vijay Chopra joining us this morning. Good morning, gentlemen. Kunal, first I'll come to you. Looking at the market setup, I'm sure nobody's complaining about the market moves today. So what are your views about the markets, and also what are your high risk and low risk ideas for the viewers today?
Well, absolutely, Cheryl. And for a trader, I think it's so confusing and confounding because one day down 600 points, other day down 200 to 50 points. I think it's very, very difficult to digest. But that's how the markets have been. No complaints as such. If you're a bull, getting a 250 points rally after what transpired on Friday, I think is taken with both hands from many of the bullish traders. Now. One of the segments in the morning which I did on Chartbusters, I mentioned that how the Nifty charts has shown a continuation rally of almost rising channel pattern since last 5-6 months. So, and from that aspect as well, 14,500, which is the support or which the low which we tested on Friday, that becomes a very, very important and a crucial support for the index going forward. So I think the near term trend for the index would probably depend on whether we continue to sail above this 14,500 support or not. And if yes, then the chances of this rally shaping up and building up into a new trend for the index is pretty much high. Nevertheless, I think what we've seen the last couple of days, in fact, even on Friday, was the continuation of rally for many mid-cap names. So I'm focusing on a couple of stocks and the ones which have been on extremely strong momentum. Two buy calls is what I'm suggesting, and both of them are different themes as such. So the first one which I'm suggesting is about Bodal Chemicals. We saw many of these chemical stocks, like in the morning I had suggested Sudarshan Chemical is a buy, have done exceptionally well. So buy on Bodal Chemicals, target 98, stop loss 78. And the second is a contra buy on Eicher Motors, expecting auto stocks to pick up pace, targets 2800, stop loss 2450.
Kunal, I have a question in that we spoke on Friday when the sell-off was really picking up steam, and we spoke about the Bank Nifty at that point, and you said that a strong support was building at 35,000 and that if it broke that support there would be quite a lot of sell-off. We actually did see that happen in trade. What is your fresh view on that particular index? Because I think that will be in focus considering that FIs have in fact turned net sellers in a big way. We could see some pressure on that going forward as well. And also, could you share your high risk, low risk ideas?
So, Alex, yes, we were discussing this on Friday as well, that how 35,000 is a crucial support for Bank Nifty. Today also in the morning when the Bank Nifty opened up, there was this bit of a jitterness in the Bank Nifty where we had a touch and go movement towards that 35,000 mark. Fortunately, the markets managed to climb back above the 35,000 mark on the Bank Nifty, and we've scaled up another 300 points, 350 points from those levels. But what is very, very interesting with these round strikes was the behavior of option writers. Now, what actually happened on Friday was at the end of or the closing, we saw some intriguing data where there was huge amount of call writing. For example, 14,800 and 15,000 strikes on the Nifty had seen a huge amount of call writing. Almost a 40,000 to 30,000 contract respectively was the extent of call writing. Now, if you see the rally, for the index, so as we are nearing that 14,800, there is some sort of fatigue which comes at these levels. So the idea with indicating support and resistance levels is because it becomes very, very crucial junctures where the markets can go through an inflection point, which is what I was saying. So we need to see how the second half pans out, whether the index builds on to this initial gain, whether we manage to scale past and close comfortably above that 14,800 mark, and for example for Bank Nifty above the 35,000 mark. If that happens, the earlier resistances would then act as being support. So I think that's the very, very important outlook from an index perspective. Coming to the stocks, as I mentioned, two buy ideas. First one is Bodal Chemical as a high risk trade, buy with a target of approximately 98 to 100 rupees as a potential target range. So expecting another 15 to 20% on the upside. Stop loss could be kept at approximately 77 mark. And the second is a buy on Eicher Motors. This is more of a contrarian buy. Strong signals of double bottom formation. Auto stocks are picking up pace today, and I would expect Eicher Motors to also do pretty well for itself. So buy with a target of approximately 2,750, stop loss 2,450.
Motors, in fact, interesting. Cheryl pointed out as well, sales numbers are not too bad, not too shabby for the month of February for Eicher Motors. But I want to go across to Vijay. Now, Vijay, good morning to you, and thanks so much as always for joining us. But what are your big ideas for today? A lot of stocks saw major correction on Friday, but some of them, in fact, are seeing quite the smart recovery today as well.
Well, I think that markets are going to be very selective as far as the stocks go. We might see some action on the index, but yes, there is a huge action in the mid-cap space. And I think that commodity-related stocks are going to shine for the next few years, especially if you look at, iron ore-related stocks or copper-related stocks. We've seen what has happened to Hindustan Copper. The stock has risen almost 50% in the last look at what Tata Steel, BSL, JSW, and the list is endless. So I think that there is a huge potential in the commodity-related stocks, and we should and investors should stay with commodities for the next few years. So my call for today is stock is Divis Labs. I would recommend a target of 3,600. It's a very stable company with huge focus on APIs, and I think that API business is going to grow, and Indian pharma industry is going to find a better place in the global arena. And Divis is one of the companies which I like, and one can buy for a target of 3,600. My second recommendation would be again a commodity-related stock. It's Coal India. I think that the stock does well generally in March, and especially one should buy in cash, as it's a good dividend yielding stock, and we see a lot of action in every March. So I think that coal can reach out to maybe 160, 165 levels from here. So there's a decent upside in store. And my final recommendation would be NMDC, although I don't find it a very high risk kind of a stock, but again medium risk because it moves very fast. And as I said, I would like to recommend to stay with commodity related stories, because I still see a lot of steam in these companies. Look at the global players. BHP Billiton is doing very well, globally. So all the commodity related stocks should do well. So NMDC is also one of those. I think that it can be bought for a target of 150, 160, and it should be held on to it. It could be a portfolio stock, and if somebody holds on for a longer term, I think that it will give better returns over a period of time. So these are my three recommendations for today. But again, whatever happens in the market, if you stay with the commodities, there is money to be made for the next few months and a few years, I guess. So better to be in commodity-related stocks, and or conservative sectors like pharma. I think that if rupee weakens, IT also should do well. Pharma, IT, and commodity, I think, should be the centers of focus in the coming months.
All right, that's a view coming in from Vijay on the markets as well as the stocks that he likes among the commodity space. All right, time for a break on this edition of Buy Now Sell Now. Hang in there, gentlemen, and also the viewers, because after the break we'll come back with the queries segments. So stay tuned.
Welcome back to Buy Now, Sell Now on ET Now. This is a fun segment that we do for you. In fact, we're taking viewer queries as we normally do. And the first one that's come in is from Nageshwar Rao. He's written in saying that he bought 1,000 shares of Tata Power at 67 rupees per share way back in 2014. And he's asking whether he should continue to hold. And I do realize that since he's held for so long, it's likely that he's looking for a long-term outlook on this stock. But I'll still come to you, Kunal, on this. On the charts, at least for the near term, if in fact the fundamental view is that he should consider perhaps booking a little profit, when should he consider doing it? What are the charts indicating for the near term?
So I think first of all, congratulations to Mr. Nageshwar Rao for holding on to the stock. I think it's been an excellent turnaround for Tata Power this last 1 year. 4 quarters have been quite fruitful for the stock from a rally, rather from a level of almost 30 or sub 30. The stock has managed to triple itself to 95, 96 plus levels where it's currently trading. Now, what has happened for Tata Power is that this stock has come out of almost a 10-year of correction. So from 2008 or 9 high, where the stock was at 150, 160 rupees. From there on, the stock was going through a downward drift which lasted for so many number of years. So this is the first time where Tata Power seems to be coming out of this 10 years of consolidation or 10 years of correction, to be more precise. So I for one believe that this stock has channeled itself to a new uptrend for itself on the longer term charts. I think the question now is how long and how far can the viewers still continue to hold on to Tata Power, because I believe for one that the more higher the duration in which you can hold on to the stock, the higher and stronger the potential for upside for Tata Power is. So I for one believe that it's very much possible that over the next couple of years or maybe over the next 2 to 3 years, the stock can scale past about that 150, 160 mark and even go beyond that as well, because such 10-year breakouts, when it happens with such strong volume formations like what we've seen the last 3-4 quarters for Tata Power, I think channels itself to a new long-term uptrend. So I believe you should hold on to your stock. You already have buffer, and I think over the next couple of years, at least a modest target of 150, 160 could be possible for Tata Power. But as I said, the more longer you hold on to the stock, the higher possibility of a gain, much higher gain is there for the stock.
Thanks for that view, Kunal. I do want to understand from Vijay whether the fundamentals are calling for a similar action by the shareholder, because incidentally, Vijay, we've spoken about the fact that it's strong leadership by Mr. Chandra for the Tata Group. You've had several stocks that have been spoken about very positively for a turnaround that they witnessed, not least of which are Tata Motors, Tata Steel. What is your view on Tata Power, and should the investor hold on?
Alex, you have hit the nail on the head. I think that what was missing 10 years ago was Mr. Chandra, and since he has taken the reins of the entire group, we are seeing a complete turnaround and debt reduction. So the company is now working full time on reducing the amount of debt they have, consolidation of companies. Many of the companies have already amalgamated, and we are going to see a lot of mergers happening and a lot of synergies which were there between the group, and nobody was trying to join the dots. So he has done it beautifully, and I think that next 4-5 years we're going to see a lot of mergers happening within Tata Group. As Mr. Chandra also says that he is going to channelize the total energy and synergy and the finances of the group, and going to work on leakages and wastages. I think that Tata Power is a fantastic stock, and the kind of breakout we have seen, I think it would cross its last high of 160, 165. So just be patient, and I would really congratulate this gentleman. It's a rare breed nowadays that people wait for 6-7 years for a stock to perform. I think that it might be one of those cases where we saw Hindustan Lever staying put for over 8-9 years, 10 years, and then suddenly in 1 year we saw a spurt of 700 rupees on the stock. So I would say that Tata Power is a fantastic company. Just keep on holding and adding if possible, and bringing down the average price, and I'm damn sure that in the years to come we are going to see newer highs for this company. Looks very, very strong financially, fundamentally, and on the charts as well.
All right, that's the word coming in from Vijay on Tata Power, saying that we expect to see newer highs in coming years for Tata Powers. All right, let's move on and let's get on board our next viewer query. And this is from Vinod Menon. He's written to us from Bangalore saying that is it a good idea to enter Maruti Suzuki at current market price, and whether the stock can correct further. Kunal, I'll come to you with this query first about Maruti Suzuki, currently trading at around 6,900 odd levels. How are the charts looking for Maruti Suzuki? Remember that auto sector had a tough time during the COVID period. So how are the prospects for Maruti looking like from here on?
In fact, Cheryl, in the morning, on the early morning show, I'd given a buy call on Maruti, and the stock apparently the last 7-8 days had gone through a very steep correction from 7,800, if I'm not wrong. The stock had corrected to 6,800, 850, where it closed off on Friday. So I was expecting a bounce on Maruti today morning, and fortunately the stock has obliged with a mild bit of a bounce. But I also believe that there is a possibility that a new trend could reshape for many of these auto stocks going forward as well. So looking at the charts, the stock apparently has taken a bounce from exactly its 200-day moving average. Now, 200-day moving averages, they tend to be some very strong support zone for many of the stocks, and we've seen that time and again when stocks bounce off from those averages, they tend to respect these averages. They complete a lot of mean reversion processes, and then it manages to kickstart a fresh trend for itself. So I would anticipate that something similar could happen to a stock like Maruti, and which is why I would recommend to the viewer to try and go ahead and with the investment. I would expect that even if it's a very shorter term trade, I would expect in the very near term that the stock would probably come back to at least a 7,200 to 7,500 zone. But if the trend continues to move up higher, then the possibility that this stock can also breach towards its all-time high over a longer term view is very, very high probability.
All right, that's the view coming in from Kunal on Maruti. Vijay, what's your take on Maruti Suzuki? Good times coming in for the stock. Also, does it make sense to buy it at the current market price?
Well, I think it's a great company having the largest market share, and it has, thumpingly won over each and every critic, which has come and said against Maruti. And I think that they are one company which understands the pulse of the nation. And as far as the four-wheeler market goes, I think the kind of range this company has, I don't think any other company has that kind of a range in at least the entry segment. So no problem with Maruti. We can buy this stock maybe for a 400, 500 rupees upside. But I think if you ask me about what is my choice in the auto space, I would say Mahindra and Mahindra would be my choice, because from tractors to earth movers to trucks to smaller trucks and to cars and to EVs, the range is huge, and even to two-wheelers. So I think that Mahindra and Mahindra is a better placed company in the entire auto pack. Although I like Maruti a lot, and it can give some gains, but yes, Mahindra and Mahindra over a period of time should maybe, if I give you a 3-4 year target, it can double up from here. So being a large cap, and in spite of the fact that it is a large cap, it can double up from here. So I think there's a huge potential in Mahindra. Although Maruti can be bought into for a gain of 300-400 rupees, 500 rupees, and one should exit there. But the way tractor market has revived, I am fairly bullish on the rural India market and the tractor market per se. And Mahindra has done wonderfully well there. So my first choice in the auto space is Mahindra. But again, Maruti, if you're asking, you can get a small gain here.
All right. Well, that brings us to the next query. We've got a question coming in from Sagar Kate, and his question is on a couple of stocks here, Kunal, on Century Ply and on VIP Industry. I see that VIP, interestingly, has actually come back more or less to where it was exactly a year ago, and it is trading ahead of its simple moving averages from what I can see. What are the charts looking like, though?
So they are excellent charts, Alex, and I think both Century Ply apparently has been one of the most steadier stocks, from the pack. And I think, the stock, even at current levels, looks to be a stock which is moving in its own tangent altogether. So, unfazed by the volatility which happens into the markets every now and then. And, a stock which has gone through a very stable, subtle, and a very clear and a classic uptrend for itself. So it has all those ingredients of doing pretty well for itself. Now, the only catch in the question is that if you're looking to buy these names, what is a perfect level or a better level to try and buy these stocks? Because these stocks, they don't have a tendency of giving you those odd phases of corrections, or rather regular phases of corrections. They can give you a correction maybe once in every 2 months or 3 months, but that would be a sizable opportunity for someone who's waiting to buy this stock. So yes, both these stocks, VIP Industries on the medium term charts has given a breakout, is now almost at a 7-month, 8-month high for itself, and Century Ply has also been doing pretty well for itself. But I think as an ideal level for an entry, or if you're looking to average, assuming if you already hold the stocks, then I believe that wait for a good amount of correction, at least, or maybe a time-wise correction into these names should be taken as a good opportunity. So I would suggest a buy on dips on both of these names. But yes, both of these the charts, they look extremely strong on the longer-term prospects.
All right. On that note, Vijay, let me come to you on the fundamental view. These are two diverse sectors, but particularly I want to hear your view on Century Ply, because it is a sector that I think a lot of people have spoken about in the past several months. The fact that building materials will be in focus going ahead, because you see at least some evidence of a lot of activity taking place. I look at the building nearby and I see a lot of action taking place. So would you say that it's a good opportunity to buy for the long term?
Well, Alex, again, I'm telling you, and this I've been reiterating since almost 5-6 months, even on your channel, that we're going to see a major revival happening in the real estate space. And so to say, we have seen, not only there is interest from the side of the customers, but the governments are also helping. We have seen, the duties coming down, and there have been revision of the circle rates in Delhi. All these things, is denoting that governments also want that there should be activity in the real estate space. The reason is because it is a major employer. So if at all any government wants to come out of blues or out of a time where, there's a dearth of jobs and there's a dearth of activity, economic activity on the ground. And of course, it also gives a fillip to the entire GDP of the country. So infra space and housing space are big contributors to the overall GDP of the country. So I think the government is well realizing this. They are helping the builders, they are helping the entire industry, and they are also helping the customers. So the interest rates are low. Which is a very conducive point for especially first-time home buyers or even second-time home buyers, because low interest rates attract a lot of investors who want to invest into an asset class. And property prices have been suppressed for over 5-7 years. So I think that they're getting a good deal, a good bargain as well. So I think that the next 4-5 years are going to be very good for the entire real estate space, and we're going to see a lot of activity. Century Ply is one company which is associated with the growth of the space. So I would say that just keep on holding to the stock, and if somebody wants to get into the stock, it's even the better. So companies like Century Ply, Green Ply look fantastic. Green Ply is better. But again, if you ask for Century Ply, if you get it in a dip, keep on holding it. The stock can inch up to 500 as well, because most of the consumption is happening in the real estate, in the housing space, and Century Ply is one company which can definitely contribute towards the housing material. So again, a great company. Wait for a dip, and then you can enter into the stock. The second stock I think you mentioned was VIP Industries. So we saw a major downside, in this company when COVID set in, because most of the products which VIP sells is related to travel, and travel absolutely came to a full stop. So I would say that things are coming back to normal. People have started traveling. Airlines are seeing that load factor again on the sectors, on the major sectors. And I think as international travel also opens up with the vaccine in place, so we'll see a lot of activity in the next few months. So VIP also seemingly looks good, and so does Safari. So Safari Industries is another company which is in the same space and looks good on the charts. So VIP, Safari, Century Ply, Green Ply, these are great companies. Wait for a dip and you can buy and just hold on to these stocks. You're going to get good returns on both these stocks.
All right. Well, gentlemen, it seems like you've got a consensus view on quite a few of the names that we discussed today. Thank you so much for joining us on Buy Now, Sell Now and on ET Now. In fact, we're slipping into a short break, but do stay tuned. We've got a lot more coming up on the other side.